Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with an interesting development in the world of artificial intelligence and healthcare. Tempus AI, a company that specializes in developing AI solutions to improve patient outcomes, has seen its stock plunge this week after a well-known investor, Cathie, reduced her position in the company through her ARK Innovation ETF. The fund sold 62,352 shares of Tempus AI, valued at around $5.2 million, which has led to a 12.4% decline in the stock's value over the past few days. Now, it's worth noting that Tempus AI still holds a significant weighting in another one of Wood's ETFs, the ARK Genomic Revolution ETF, where it's the largest position with a 10.7% weighting. So, while the reduction in the ARK Innovation ETF may be a cause for concern for some investors, it's not necessarily a sign that Wood is abandoning the company altogether. Meanwhile, we're also seeing some movement in other stocks, including Alibaba, which has been making headlines recently due to its significant discount to comparable U.S. companies. However, with the recent run-up in price, some analysts are now questioning whether the stock is still undervalued. We'll be keeping an eye on this story and bringing you more updates as it develops. In other news, the ARK Innovation ETF has also been reducing its position in Tempus AI while increasing its stake in other companies like Alibaba. This has led some investors to wonder what Wood's strategy is and how it may impact the broader market. As always, we want to remind our listeners that investing in the stock market involves risks and uncertainties, and it's essential to do your own research and consider your own financial goals and risk tolerance before making any investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest market news and trends. In this segment, we'll be discussing the recent developments in the U.S. stock market and how they might impact your investments. So, let's get straight into it. The S&P 500 rose 0.6% on Friday, breaking its three-day losing streak after a report showed that inflation is behaving roughly as economists expected. The Dow Jones Industrial Average gained 299 points, or 0.7%, and the Nasdaq Composite added 0.4%. These gains brought the indexes closer to their all-time highs, set earlier in the week. Now, you might be wondering what's behind this surge. Well, it seems that the report on inflation, which accelerated to 2.7% last month from 2.6% in July, was a key factor. Although this is still above the Fed's 2% target, it was precisely what economists had forecast, offering some hope that the Fed could continue cutting interest rates to give the economy a boost. But, as we all know, there are always two sides to every story. The latest tariffs announced by President Trump, which include taxes on imports of pharmaceutical drugs, kitchen cabinets, and heavy trucks, could potentially push inflation higher. This has created some uncertainty in the market, with companies like PACCAR, which makes Peterbilt and Kenworth trucks, seeing a 5.2% gain, while pharmaceutical companies like Eli Lilly and Pfizer also rose. On the other hand, companies that sell home furnishings, which could be hurt by higher prices for imports, saw mixed results. Williams-Sonoma and RH, for example, swung between gains and losses throughout the day. It's also worth noting that Costco Wholesale fell 2.9%, despite reporting a stronger profit than expected, due to concerns over slowing membership renewal rates and revenue growth at its stores. As we navigate these complex market dynamics, it's essential to remain informed and adapt to changing circumstances. We'll continue to monitor the situation and provide you with updates and analysis to help you make informed decisions about your investments. And that's all for this segment of the Riskwiser Zone. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got an exciting closing segment for you today as we dive into the world of tech and finance. You might have heard the news about Google's latest move in the AI computing space, and we're here to break it down for you. Recently, it was announced that Google has agreed to guarantee $1.4 billion of AI computing startup Fluidstack's $3 billion 10-year agreement with Cipher Mining. As part of this deal, Google will also have the right to buy a 5.4% stake in Cipher. This move is seen as a significant development in the AI computing space, and it's got many investors and industry experts talking. But what does this mean for you, our listeners? Well, let's take a closer look. On one hand, this deal could be a vote of confidence in the future of AI computing and the potential for growth in this sector. Google's involvement could bring more stability and credibility to the market, which might attract more investors and drive innovation. On the other hand, some analysts are warning that this deal could also lead to increased competition in the AI computing space, potentially driving down prices and margins for companies like Cipher and TeraWulf. Additionally, there are concerns about the high short interest in these stocks, which could lead to a short squeeze and significant price volatility. Speaking of short squeezes, JP Morgan recently flagged 3 stocks with the ingredients for a potential short squeeze: Cipher Mining, TeraWulf, and Nuvation Bio. These stocks have seen high buying activity from retail investors, despite elevated short interest from institutions. While this could lead to a surge in prices, it's essential to remember that short squeezes can be unpredictable and may not always result in long-term gains. As we wrap up today's episode, it's crucial to remember that investing in the tech and finance space requires careful consideration and a balanced approach. It's essential to do your own research, set clear goals, and manage your risk exposure. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.